This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. Bloomberg surveillance with global stocks actually energized. Now, this in part is due to the stimulus or the proposal of stimulus that we're seeing in the United States with the White House's surprise re-entry into pandemic relief talks. This $916 billion proposal that opened a potential new path to a year-end deal. You can see global stocks climbing towards another record high. The hope of a stimulus is overshadowing fears about resurgent coronavirus cases. And then the other stories we're looking for in the market, we understand that U.S. private equity firm Platinum Equity is also nearing an agreement to buy Ingram Micro from NHA. That's a nice Bloomberg scoop. And then, of course, we're on Brexit watch with Boris Johnson having dinner with the Commission president later today. This is Bloomberg.
Hello. Welcome again. Yesterday we had four pairs. We had the Euro USD, the USD Swiss franc, and here we had the Canadian dollar Japanese yen, and here we had the Euro Japanese yen. Those two we closed the trades, and for that we change it. Now we have the New Zealand USD and the USD Canadian dollar. We will trade this for today. These two is from yesterday. These two are new. Okay, we chose the New Zealand USD here because here is the resistance level, and here, as you can see, is the new resistance level. Okay, we place a trade here. If this will go again here on this level, we will place another sell order. In the USD CAD, here is the support level. As you can see, we add another buy order here on this level. If it will reach above this level, we will close the trades that we are open here. These two, the Euro USD is unchanged from yesterday, and the USD Swiss franc the same. Here we have two trades, as this will go here, we'll close this trade here. Stay with us and see what happens further.
Businesses in our city, in our state, in our country, quite honestly, are not going to return from this.
People are at as stretched as they can be almost.
The tea leaves have never been harder to read.
The productive sector of the economy has been very much sheltered in this shock.
I worry that markets are getting ahead of the politics.
Fiscal stimulus isn't there yet, and you've got a complete lack of coordination.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. With your equity market adding to the record highs at the close on the S&P 500 and on the NASDAQ, the S&P up by 5-6 points. We advance 0.15%. And you've heard the talk, Tom, that somehow we're making progress down in D.C. I hear a lot of noise. I see a lot of movement. I sense very little progress down in Washington.
Well, as you know, John, the news gets made in the late afternoon and into the early evening in Washington, and the shift for our viewers who missed that, our listeners who've missed that, is real simple. There's now talk of a single $600 check. I don't know how you sell that to a huge part of America flat on their back. Matthew Lazzetti at Deutsche Bank re-emphasizing an all-in 12% unemployment rate. That's a Deutsche Bank calculation.
Different sound, same story, Tom. That's the issue down in Washington right now. Same issues. Liability protection, point one. State aid, point two. And Leader McConnell's saying, let's put those 2 points aside, agree on what we can agree with, and revisit those 2 points in early January. That's his position at the moment. I have no idea. In fact, we do. We have a clue from the Democrats as to whether they're going to come along with that right now. Doesn't look like it.
Well, that's a split of the nation, and with it, you see the markets moving up. I love Ben Laidler's note out moments ago where he really says, look, this market is moving so fast for the elites, for the haves of America, that he's even seeing his sentiment statistics really roll over. He says only 6 times in 14 years has he seen sentiment so up. There's no other way to put it. I know that'll be a huge theme this morning.
No doubt. Lisa, sentiment, the narrative, seems to be written by wherever the market closed the day before. How many times have we read that headline? Stocks are up because of stimulus talks. I think the perception of how stimulus talks are going are basically shaped by what is happening in this market. For the conversations we're having anyway, that seems to be what dictates them at the moment.
I think that you're right to point out that there's been no change in the language, but there has been a change in the political pressure, especially post-election. And I think that is sort of the question, especially heading into that January 5th Georgia election that's going to determine the dominance of Senate. Meanwhile, as you both were talking about, there is a greater sense of urgency as you see the economy continue to slow down. I'll be watching 10 a.m. U.S. October JOLTS job openings report. This is a leading indicator of the jobs market. There you go. You can see initially there was that V, that spike up, and now it has been decelerating. Could that add to this feeling that we're losing momentum? Meanwhile, at 10:30 a.m., we're going to get the EIA crude oil inventory report. I know scintillating. Both of you are hanging on the edges of your chairs. However, there has been a steady increase in the inventories of gasoline, basically indicating that people are not driving around as much. This means less commercial activity. Again, deceleration, adding to that sense of urgency. And at 1 p.m., the U.S. is planning to sell $38 billion of 10-year notes. This will be interesting, especially ahead of next week's Fed meeting. How much are investors going to be buying at a time of expectation for the Fed to come in and put their foot on yields and bid up prices? Or are people going to take note of some of these inflation forecasts from Jamie Dimon and from Jeff Gundlach? You're laughing, John Ferro. I can hear you talking about how inflation's going to just take off and accelerate next year.
Look, this
yeah,
is
birthday boy, what?
This is going to be a theme this morning. John, jump in here. This this is really, really important. We have seen this, John, for over a decade of people modeling out a higher interest rate environment. Time after time after time, it hasn't happened. Dominic Constant and Credit Suisse years ago had the mother of all charts on this. It's been the great missed call of, I'm going to say, 15 years.
I think whenever the CEO of a bank starts making calls about markets, it makes it very awkward for everyone who works at the bank. When that issue comes out a little bit later, you're telling me JP Morgan have nothing to do with 10-year treasuries now because Jamie Dimon says he won't touch them with a 10-foot pole.
Mr. Dimon listens and watches every morning, you guys. And, let's be clear. Joyce Chang, John Norman, Jan Lois, and the rest of them, they don't agree with their CEO's call on debt.
Well, they didn't back in 2018 either when Jamie Dimon said you better be prepared to deal with rates 5% or higher. That never came around. Jamie Dimon on the equity side of things, when it comes to his own stock, has been prolific. I remember in February 2016 when we had that huge growth shock around China and he stepped back in and basically ticked the bottom of the market when he started buying JP Morgan stock. But on the bond market, Tom, we've seen it time and time again. The people who are expecting yields to climb and yields keep going lower. I know you caught up with Steve Major of HSBC a little bit earlier this morning, and he's out there saying 75 basis points into year-end 21.
Then we've got the perfect guest to carry this forward. Let's get to it.
Jim Caron of Morgan Stanley joining us right now. Jim, weigh in. I know it gets awkward when the CEO of a bank starts to make a call, but it's not your CEO. And I haven't heard Gorman say anything about 10-year yields recently. So what are you looking to happen in 21?
So we are looking for yields to drift a little bit higher. But, I think a lot of these calls for inflation and significantly higher yields are very, very premature. I don't see this really until maybe 2024, 2025. And let me go through the reasoning and rationale for this. The point here is that we have a pretty significant output gap. So trend growth in the U.S. is just under 2%. It's just about 2%. And we grew this year at about -3%. So therefore, we're below trend growth by 5%. Now, that miss in trend growth is what we call an output gap. And the question that everybody asks themselves is, when are you going to close that output gap? Because that's when aggregate demand comes back into the economy, and that's when you have more demand that pushes prices higher. So until the output gap closes, you don't really get higher inflation. Now, by my calculations, we would have to grow at 5% in 2021 in GDP in the U.S. and 5% again in 2022. And that's beyond most forecasters. In other words, for next year, many forecasters have 5 or even 6% growth. But then the following year in 2022, most forecasters have somewhere between 2.5% and 3% growth. So we're going to fall short. So what do we need? We need a significant amount of, whether it's fiscal stimulus, continued monetary support, in order to get these animal spirits moving higher, to get prices moving higher. But right now, it looks like we're falling short of that. So it's not that yields can't start to rise. We're seeing that with break-evens. 10-year break-evens are around 190 basis points. Real yields are falling. All of this is a reflection of expected stimulus, whether monetary or fiscal, but we're not actually seeing the delivered inflation really coming into goods prices. And that's really the key. And unless we get that, it's going to be hard to have a sustainable rise in 10-year Treasury yields beyond, say, 1.25% or 1.4% next year, for a moment. But that would just be a natural adjustment, not an inflation scare.
125 on a 10-year. The idea that inflation and this reflationary narrative doesn't evolve, doesn't materialize. That's your position, Jim, going against the consensus on that point. But when it comes to risk assets, you're perfectly aligned still with the crowd, Jim. Why?
Yeah, well, because, I think that there's a shortage of securities, for one. There's a lot of liquidity in the marketplace and not enough securities. Corporate supply next year is going to probably be lower by, in terms of net issuance, it's going to be about negative $500 billion. So we have about 1.8 trillion in investment grade. Next year, we may expect around 1.3 trillion. So sorry, 1.8 trillion, yes, this year, and 1.3 trillion probably for next year. The Fed is doing QE, and the Fed continues to buy, 80 billion per month. They may even extend their maturities next week. So the point here is that there's a lot of money, which by design is out there to flood the markets, and there's just not enough security. So there is going to be demand for yield. So yes, it is a little bit counter consensus, but the point here is that fiscal policy and monetary policy together will actually stabilize the markets quite a bit and keep interest rates relatively low. I mean, I think rates rise a little bit, but I don't think they rise as much as what, some may be thinking that they might, just because there's just so much cash on the sidelines that is looking for places, looking for yield, and it will come into these markets.
Jim, we've gotten a little bit philosophical in the mornings on Bloomberg Surveillance, and your note had a very philosophical undertone, the idea that there is this incredible divergence and tension between asset prices that continue to rise due to some of these interventions from policymakers, and that fundamentals really are not catching up. What's the breaking point for that?
Yeah, well, eventually it does break down. So look, I mean, essentially what we need to have is aggregate demand come back into the marketplace, right? If that doesn't happen, then all we're going to do is stretch valuations more and more. Here, let's take this as an example. Investment grade credit spreads in the U.S. is trading at about 100 basis points. High yield OAS spreads is under 400 basis points right now. So we've brought forward a lot of the performance in the market at this point for 2021. So in other words, 2020 was about a promise. Fiscal stimulus, monetary stimulus, and we hope that things are going to get better in 2021. So all that performance has been brought forward. If we don't deliver on this growth in 2021, so 2021 is about the delivery of the promise versus the actual promise that was made in 2020. If we don't deliver on this promise in terms of growth, then these asset prices are going to look a little bit expensive, and there could be an adjustment downward in price to reflect the fact that we're not growing fast enough. It's not that we're not going to grow in 2021.
Yeah.
Is will it be enough? And if there's not enough,
Jim,
asset prices will address down.
I'll tell you a great story about 2022. Just you wait. Jim Caron at Morgan Stanley Global Fixed Income.
Just you
Thank
wait.
you, sir. You know how this works, don't you? Even if we do get that downside surprise, we miss expectations in 21. There'll be someone telling you about a beautiful story of 22. A beautiful story, Tom, a normalization. Things getting back to normal.
Yeah.
Growth rates. In fact, we're going to go above trend growth. Maybe even the Fed will think about raising interest rates. It'll be that good in 22.
What I know, John, it's a single missed call of the last many, many years, and that is a statement by people in ties and bow ties and women in fancy dresses that it's a single-digit equity world. It has been wrong, wrong, wrong. There's no other way to put it.
Oh, this year's been phenomenal. Talking about the doubters, Lisa, the bond market, Europe, Portugal, sub-zero on a 10-year. And everyone came out calling it totally crazy. That's the bond market in Europe right now. That's the reality.
And the ECB is expected to continue to add to that power and that rally. I will just note, $5.6 trillion. That is how much the major central banks around the world have added in quantitative easing purchases this year.
See, this is great.
The numbers
I'm
are
talking
incredible.
Equities, and you guys are
Absolutely
talking bonds.
incredible.
I mean, it's like
We're
Mars
talking
and
past
Venus
each other,
here.
Tom. That's what we do. That's what we do.
Birthday.
Just because it's your birthday doesn't mean we're going to stay on script with you.
Why am I here?
Coming up,
supposed to get, like,
Mark
a month
McCormick
off, or-
of TD Bank on the ECB decision coming up tomorrow. For our audience worldwide this morning, good morning. This is Bloomberg.
With your First Word News, I'm Ritika Gupta. The Trump administration is making its first move since Election Day to break a long standoff over a coronavirus relief package. Treasury Secretary Steven Mnuchin's plan calls for $916 billion in spending. It would include aid to the states and liability protections for businesses. House Speaker Nancy Pelosi called it progress, but she said it shouldn't disrupt negotiations already underway. The U.S. government has an ambitious plan to vaccinate most Americans by next summer, but it rests heavily on 2 coronavirus shots that U.S. regulators won't get a chance to rule on until early next year. AstraZeneca and Johnson & Johnson together would provide up to 200 million doses of vaccine in the first quarter. The Supreme Court has dealt a sharp blow to President Trump's efforts to overturn the election results. It rejected a request by some of his allies to overturn Joe Biden's victory in Pennsylvania. The High Court's decision came in a one-sentence announcement and didn't say whether any justices dissented. There's a deal to unblock the European Union's $2.2 trillion budget and stimulus plan. Poland and Hungary have agreed on a compromise with Germany. That's according to the Polish Deputy Prime Minister. Poland and Hungary had vetoed the funding plan. They objected to tying funding to the adherence of rule of law. Global News 24 hours a day on air and on Bloomberg Quick Take. powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
recommend is we set aside liability and set aside state and local and pass those things that we can agree on, knowing full well we'll be back at this after the first of the year.
Senate Majority Leader Mitch McConnell looking to lay aside some differences and maybe agree to a deal down on Capitol Hill. Will the Democrats come along with him? From New York and London this morning, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, live on Bloomberg TV and radio. Let's get the price action this Wednesday morning. Shaping up as follows on a record high in the S&P 500. We add some weight to it, up 7 through 3,700 on the S&P. We're up another 0.2%. In the FX market, ahead of the ECB, about 24 hours away and change. Euro dollar 121.12 and up about 0.1%. Euro showing just a little bit of strength, though off the highs for 2020 that we had last week. And in the bond market, Tom, just a little bit of a lift, up about 2 basis points, no drama on a 10-year, about 94 basis points this morning.
Yeah, but I'm glad you point that out, John. And it's really germane. The real yield right now, the 10-year real yield, negative 0.9785. So it really correlates in nicely again with equities lifting up. I want to get this out of the way quickly with Kevin Cirilli, our chief Washington correspondent, because I know John and Lisa really want to talk about a single $600 check. Kevin Cirilli, Timothy Bell over at the Post, talking up the Nevada decision last night late. This is new news. 6-0, they voted against Trump and allies on the Nevada elections, and they talked about one single phrase: to demonstrate error of law that did not occur. Have we ever seen an error of law in any of this presidential litigation?
Well, look, I mean, all of these cases, now close to 40 cases at least, have been tossed out by judges across the country. And so I think what you've seen in Nevada, as well as what you saw with the Supreme Court in regards to Pennsylvania, is really a continuation that the results are not going to be overturned. Now, I would say the following is that just several months ago, in conversations and reporting that the entire industry had done about the potential risk for the judicial branch of the United States government to be intensely politicized, akin to the 2000 election, that simply hasn't been the case. And so even in these incredibly polarized times, the Supreme Court of the United States has not been wrapped into a large, questionable and polarized political fight.
Meanwhile, if you talk about questionable and polarized, let's talk about stimulus talks that are continuing in Washington, D.C. Steve Mnuchin, Treasury Secretary, entering the fray with his $916 billion plan. A lot of people using this as a justification for renewed optimism in markets. John was talking about how you're not seeing any distance bridged in the actual language. Has any progress been made?
Yes, significant progress. I think even the fact that the administration has come out with a proposal from Secretary Mnuchin, coupled with the continued rhetoric coming from Senate Majority Leader Mitch McConnell. Yesterday, I spoke with one Republican lawmaker in the House of Representatives who essentially told me that they are still incredibly optimistic that this will get done in the next 7 to 10 days. Even if there's only a $600 fiscal stimulus check. And yes, that will mean Senator Bernie Sanders and Congresswoman Alexandria Ocasio-Cortez will likely, they've already said they're not going to vote for this. The ability of Leader McConnell to give up this issue of liability protections is a very significant bargaining chip that has emerged in these talks.
Well, Kevin, he's only saying he'll give that up if Speaker Pelosi and Minority Leader Schumer give up on state aid. Any sign that they're willing to do that?
You know, to be candid, I think when you look not necessarily at the language that Speaker Pelosi is using, but other top Democrats in the House of Representatives, like, for example, Steny Hoyer and others in that circle that that really revolve around the orbit of Speaker Pelosi, yes, I do think that they would be able to get behind that, provided that, and this is where it's Washington speak, provided that aid to state and local governments could be retranslated into grant programs for state and local governments, in which case, you know, it's defining something on someone else's terms.
Kevin, Washington speak. That's not playing on West 55th Street in New York. It's not playing on streets John Farrow knows in London. When does Washington speak wake up and listen to the nation, both Republicans and Democrats?
Well, you know, I think that two things. First and foremost, the conversation that you're seeing now on fiscal stimulus is likely going to continue down to the wire. But secondly, is that yesterday the president-elect, Joe Biden, announcing that he is promising essentially 100 million vaccines in the first 100 days of his administration. So without question, the incoming administration is really saying that the vaccination rollout...
I don't mean to interrupt, but this is so important. I was just talking with Michael from Bedford moments ago, and Michael from Bedford said to me, why are we counting 100 million? What are we doing about business in America? And I don't mean big pharma or big technology like Bloomberg. What are we doing right now in Washington speak about small
next administration is. But whichever the next administration is will really benefit by what we've been able to do with this incredible science, the doctors, all of the people that came up, the lab technicians. The work that's been done is incredible. And it will be incredible for the next administration. And hopefully the next administration will be the Trump administration with a victory. Now let's see whether or not somebody has the courage, whether it's a legislator or legislatures, or whether it's a justice of the Supreme Court or a number of justices of the Supreme Court. Let's see if they have the courage to do what everybody in this country knows is right. And if somebody has the courage, I know who the next administration will be. And I'll tell you what, life will be much easier for this country because of what we've done right now, and because of a lot of the people in this room. The job you've done on the vaccine, together with a lot of others, has been a modern-day miracle. And it's really been acknowledged as such. And I want to thank you. I want to give you my love, and I want to give you my thanks, because you're very special people. And now, good luck. You distribute that, General, and really set records, okay? Set records just like we've been doing for 4 years. Thank you very much. Thank you, everybody. Thank you.
Derek, first off, let's break down this indication. Is this a commitment or a gut feeling?
Anne-Marie, this to me is a little bit more of an intuition, of a gut feeling. This is not Cassidy saying that Trump and McConnell have signed off on anything, that they have signed on a dotted line or given winks and nods or anything like that. But what he is referencing is the fact that Trump at some points has called for a much larger stimulus that's under discussion, and he thinks that Mitch McConnell is going to come on board with it at some point. It's a little bit more money than McConnell has wanted to spend, but the thought is that this is going to be, in Cassidy's view, this is going to be a way to get forward. Where we're really coming to right now is if you want to do a coronavirus sort of aid package before the end of the year, there really aren't that many vehicles to do it. This might be the most advanced one running, and so the folks who have been involved with the creation of it as it's being created are basically sitting there saying, like, there's only one train in town. If you want to go somewhere, best get on board right now, and we can tweak as we need to, but this is the only one running.
Derek, very briefly, only a few weeks left to 2020. What's the window here to get something actually done?
Yeah, you've got to have something this week, I think, Anne-Marie. You can have a couple of I's left to dot and T's left to cross, but you better have a really good idea by the end of this week where you're going, because you simply need some time to just get all of this stuff through. Remember, there's also a defense bill out there that Trump says he's going to veto that Congress might have to try and override a veto. Would be the first time in Trump's presidency that would happen. That's still on the agenda. You got to stop a government shutdown that's a couple days away. Theoretically, there's a way to patch that, but there's a lot of things that you have to do that Congress is staring at, and, clock's ticking. Everyone's going to go home from Christmas, and then are they going to come back at all before it goes over to the new Congress January 3rd?
As a new president, I'm going to speak directly to the American people and say what I'm saying now. We need your help. Wear a mask for just 100 days. It's the easiest thing you can do to reduce COVID cases, hospitalizations, and death. Help yourself, your family, and your community. Whatever your politics or point of view, mask up for 100 days once we take office. 100 days to make a difference. It's not a political statement, it's a patriotic act. It won't be the end of our efforts, but it's a necessary and easy beginning, an easy start. Secondly, this team will help get at the last 100 million COVID-19 vaccine, at least 100 million COVID vaccine shots into the arms of the American people in the first 100 days. 100 million shots in the first 100 days. And we'll follow the guidance of science to get the vaccines to those most at risk. That includes healthcare professionals, people in long-term care, and as soon as possible, it will include educators. This will be the most efficient mass vaccination plan in U.S. history. I credit everyone who's has gotten us up to this point. But developing a vaccine is only one Herculean task. Distributing it is another Herculean task. You know, and vaccines in a vial only work if they're injected into an arm of people, especially those most at risk. This would be one of the hardest and most costly operational challenges in our nation's history. We're going to need Congress to fully fund vaccine distribution to all corners of the country, to everyone. I'm encouraged by the bipartisan efforts in Congress around a $900 billion economic relief package, which I've said is critical. But this package is only a start for more action early next year. We must also focus significant resources on direct public health response to COVID-19. Our preliminary view of Trump administration's vaccine distribution plans confirms media reports. Without urgent action by this Congress this month to put sufficient resources into vaccine distribution and manufacturing, which the bipartisan group is working on, there's a real chance that after an early round of vaccinations, the effort will slow and stall. Let me repeat, we need Congress to finish the bipartisan work underway now, or millions of Americans may wait months longer to get the vaccine. Months longer than they otherwise would have to wait to get the vaccination. Look, and then we're going to need additional action next year to fund the rest of the distribution efforts. We also need the Trump administration to act now, though, to purchase the doses it has negotiated with Pfizer and Moderna, and to work swiftly to scale manufacturing to U.S. populations and the world. This can be fixed. If it is fixed, my team will be able to get at least 100 million vaccinations done in my first 100 days. The third thing I'm going to ask in the 100 days, it should be a national priority to get our kids back into school and keep them in school. If Congress provides the funding we need to protect students, educators, and staff, if states and cities put strong public health measures in place that we all follow, then my team will work to see that a majority of our schools can be open by the end of my first 100 days. That's right. We'll look to have the most schools open that we can possibly in 100 days if Congress provides the funding we need. It's not a secret how to do it. Masking, vaccinations, opening schools. These are the three key goals for my first 100 days. But we'll still have much to do in the year ahead, and sadly, much difficulty as well. We'll be far, far from done. Yet, it's possible that after 100 days, we'll be much further along in the fight against this pandemic.
Right, Maggie, I'm just going to give you the injection now. Okay. You just need to confirm that you consent to this vaccination. Yeah. Okay. So what I'm just going to do is I'm going to put it in your left arm. Yes. Is that all right? Take this off? No. It's just going to do it back this way. Is that all right? Yes. Yeah. I'll move out of the way from there. Thank you, Doctor. And relax your arm forward. Yes. Just going to be squeezing your arm, okay? Okay. Relax your arm for me. Just relax. All done. All done.
I'm not supposed to show anything.
All right, everyone's favorite stock, Tesla. Wow. Shares up more than 600% this year to date. And right now, Tesla going to take advantage of that share surge by going back to the capital markets for the third time in 10 months, raising as much as $5 billion of common stock. Joining us right now from San Francisco, Bloomberg Deals reporter Ed Ludlow. Ed, I guess this isn't surprising. I mean, given the share run up, it kind of makes sense that they would take advantage of this. I am curious as to where we stand right now with Tesla's cash stockpile. Like, how flush are they at the moment?
Yeah, so as of September, there was around sort of 12 and 14 billion cash on hand. You know, if you look at what they could raise, it could take them to nearly $20 billion. Much greater than most S&P 500 companies. And if you read across Wall Street what the analyst notes are saying today, this was a prudent move, as you say. The run-up in the share price makes the cost of capital for Tesla very attractive. But they also have an incredibly large to-do list. There are a lot of projects all around the world, a new factory in Europe, a new factory in Austin, Texas, an expansion of the factory in Shanghai. And it was long a criticism of Tesla, right, from Wall Street. When are they going to deploy the capital needed to grow? When are those CapEx numbers going to come up? And so, you know, reading today, this has been greeted positively and really sets them up for all of the projects that they have to do in 2021.
But also paying down debt, right, Ed? And that credit rating profile's got to be looking a little prettier.
Yeah, I've been reading across Bloomberg Intelligence. I've been speaking to Joel Levington. And beyond him, Wall Street generally see Tesla's debt load as manageable. But it has been a stated ambition of Tesla to pay down that debt. It's also been a thorn in the side in terms of the bears, because they would often point to Tesla's debt loads and their ability to pay it down. However, you know, Elon Musk has been speaking today saying it is a priority. We will pay down the debt. But the priority seems to be a war chest, that it needs capital to deploy for all of their technological prowess and a lot of what's been driving the valuation being based on their battery technology, on their software around self-driving. You forget that the automotive industry is a capital-intensive industry. You just have to look at the kinds of capital, the volume of capital that Ford and GM are deploying, for example, to electrify their own fleets. And so that is what Tesla is looking at, a series of big projects, new products in 2021, and it's going to take them to spend money to get there. It also ties quite nicely to profitability. One of the things that Elon Musk has been talking about this year is that it's easier to be profitable and efficient when you are producing vehicles at scale. Tesla might deliver 500,000 vehicles this year, but it wants to grow that to around 20 million by the end of the decade. If you're building at those volumes, then your bill of raw materials is much more efficient. The battery packs are more efficient, and Elon Musk's hope is that that will boost their bottom line as well.
Ed, the one key thing to watch for this company in 2021, what is it?
Cybertruck. I'll never forget being by that stage last November when that came out. No one could believe it. Were they being serious? But the demand for that product has been intense. The pickup truck is beloved in America, and we're all waiting for someone to electrify a pickup truck. So if they can pull it off and start delivering Cybertrucks by the end of 2021, as Elon Musk has said they will, then I think that's going to be a really big one to watch in the next 12 months.
We still want to make sure that it comes as fast, as expeditiously, but as safely as possible, because we know that each day that passes, there are more American lives at stake. So we want to make sure it comes out as quickly as the data allows it to. And we will have 40 million doses by the end of the year, which is a tremendous achievement, not just to have gotten a vaccine in this time, but to have produced 40 million in advance. It's having a businessman as president. It's the Trump vaccine.
Give me the status update in terms of UNICEF's access to vaccines, how it's going to provide those to people. Where do you stand, and what's your timeline here?
UNICEF has launched a tender for procurement of vaccines against COVID-19 to evaluate all vaccine candidates. And the tender is currently ongoing and will result in purchasing agreements that will ultimately ensure vaccine availability for countries within next year. Timelines are not yet certain at this stage, but we expect some vaccine availability within Q1 next year.
Now, tell me, I know you've been in discussions with airlines. We reported that last month UNICEF had a call with 40 global carriers about trying to figure out how to make the vaccine available to countries across the world. What are you talking about? What's the subject of those conversations right now?
So our initial objective is to engage critical partners in the logistics industry, airlines and other logistics service providers, to ensure that they are aware of the operation that UNICEF will be managing in terms of supplying the vaccine to at least 92 AMC countries. And in that context, we are sharing with them initial estimations around vaccine volumes, cold chain requirements, likely origins of the vaccines. Understanding none of this is yet confirmed, and we're working on qualified assumptions to ensure that they can make capacity available, and we initiate a dialogue to ensure prioritization and affordable rates when the vaccines are to be transported.
Yeah, well, tell me about those rates, because right now air cargo rates are at some of the highest they've ever been. How do you negotiate around that sort of reality?
Indeed, both in terms of capacity and rates, it's a difficult timeline in terms of the air freight industry. But the idea is to use the volumes that we will be transporting, as well as the criticality of this operation for, well, in terms of human lives, economy, and whatnot, to actually be able to plan with the airlines and ensure that that planning and the criticality of the operation contributes to make it as cost efficient as possible.
Are there any airlines that are on board right now on any level?
Works regularly. We are the largest procurer of vaccines worldwide, and we distribute vaccines, or we supply vaccines to countries for around 45% of the world's children. And these normally travel, and we transport them through airlines. So we are in regular contact with some of the main airlines that serve the destinations that we normally supply to. And these are the ones that we are having a more intensified dialogue with to ensure that this operation, given it's very unique and special, will even be more successful and smooth than the regular vaccine supply.
Can you tell me what kind of routes are going to be most critical in terms of your operation?
The majority of the countries that UNICEF will be supplying vaccines to within the COVAX facility are essentially located in sub-Saharan Africa. So indeed, that's the key destination. Of course, there's also destinations in Middle East, Asia. So there's a wide variety of countries, and we're mapping all the routes, but the majority of them are into the African continent.
Now, I know you focus on the logistics of this, but clearly one of the headaches, I'm sure, is making sure that the vaccines, whatever they are, but particularly with COVID, get to the right people, the healthcare providers, say, out in the field. How do you look at that and make sure it gets to that final end person that is so critical?
So that's UNICEF works with partners within the COVAX facility, with WHO, Gavi, and other partners, to ensure first allocation criteria, which is led by WHO, to ensure that the vulnerable groups within each country receive the vaccines or the first doses on priority basis. And then we work at country level with ministries of health, with partners, governments, and we do so on a regular basis for routine immunization, to ensure that there's mechanisms in place in terms of cold chain, but also immunization strategies to secure vaccines and doses being distributed to affected populations.
Finally, talk to our audience of CEOs, business leaders, government leaders. Make an appeal. Is there anything that UNICEF wants to see, particularly from those transport partners that you're talking about right now?
I think UNICEF and its partners are embarking in what we call a mammoth operation, an unprecedented scale in terms of vaccine distribution that requires a collaborative approach and an all hands on deck. So we call upon industry partners to work closely with us to make their assets, their capacity available. It's only working with them that we can deliver. And for sure, to consider the criticality of this operation and to prioritize any shipments, any transportation of supplies, including vaccines, but also immunization devices, syringes, safety boxes that are needed to actually conduct immunization activities in countries and protect populations against the virus.
Yeah, what were the findings?
Hi there. Well, I think firstly, the main driver for EM returns next year will undoubtedly be the effective rollout of vaccination programs. And I think Jubilant markets so far may not yet have accounted for the intricacies of vaccine distribution, especially in emerging markets. So for example, Indonesia has over 6,000 inhabited islands. Another key driver for EM will be the impact of massive stimulus spending on fiscal deficits. Now, I believe that once the dust has settled and vaccines have been effectively distributed, investors' focus will turn on how developing nations will pay for their deficits. Secondly, investors continue to favor Asian currencies and stocks relative to its other regional peers. And a lot of this has to do with the fact that many Asian countries have had a better handle over the virus. But for bonds, Latin American ones are the firm favorite among respondents due to the high yield offering accompanied by dovish central banks.
Marcus, with all the market drivers at the moment in mind, what are investors' top picks when they look at the various asset classes, stocks, bonds, currencies next year?
Well, I guess hardly unsurprisingly, Chinese stocks, bonds, and currencies are the top picks for investors in 2021. And this is despite the already stellar performance this year for yuan assets. This may be tacit acknowledgement that China will maintain a lead, especially in the first half, as emerging economies will take time to achieve herd immunity, even more time for consumption and output to recover back to normal. Indonesian assets are also another firm favorite among investors, with the stocks and bonds among the top three picks. I think we've already seen a prelude of that on Monday after Indonesian equities rallied when the nation reported that it had received its first batch of vaccines from Sinovac. Investors are also big on Mexican currencies and bonds, supported by the attractive yield and more muted inflation next year, especially compared to Brazil.
Marcus, how do investors have a look at inflation, growth, and indeed monetary policy reaction?
Yes, well, I think in general, investors expect an acceleration in inflation across most developing economies, with the exception of Russia, Poland, and Mexico. Investors have even a stronger conviction for growth next year, with respondents expecting all emerging economies to see a rebound and recovery in 2021. Of course, this will be aided by dovish monetary policies, with respondents expecting all central banks to hold rates next year, with the exception of Turkey. And I think all these factors really play into investors' forecasts for EM to outperform DM across all asset classes in 2021. Of course, as EM will be boosted by a combination of accommodative monetary policy, growth recovery, and a weakened dollar.
Ask me that in a number of weeks from now. They should be looking at all of this fraud. This is not civil. He thought it was civil. This is not civil. This is criminal stuff. This is very bad criminal stuff. So I just say this. We went through an election. At 10 o'clock, everybody said that was an easy victory for Trump. All of a sudden, the votes started disappearing, miraculously disappearing. We found much of it.
How does it look to you? Looks like Friday is right around the corner. This is just so incredible, it seems, because, I think many people, if it had happened early in 2021, would have been thrilled. This seems even better.
Yes, that's true. I mean, there's been a lot of buildup now, sort of a steady drumbeat of buildup to this crucial week that we're just starting today. The FDA, the U.S. Food and Drug Administration, will be on the spot later in the week, as you mentioned, There were very optimistic comments today, both from the Health and Human Services Secretary, Alex Azar, and also from Moncef Slaoui, the former drug industry executive who's the head of what the Trump administration is calling its Operation Warp Speed. They both said it certainly looks, based on what they know, without prejudging the outcome, that that the Pfizer-BioNTech vaccine should be good to go. So that's where we stand right now as far as the U.S. goes. That's tempered, of course, by the very high number of cases and also deaths that have been really overshadowing a lot of the optimism at the same time.
Walk me through what we've learned in the last 20 minutes or so.
So we have just received the Food and Drug Administration staff report on the Pfizer-BioNTech vaccine. And what we're finally seeing is the actual nitty-gritty details of the findings of the trial. Of course, everybody's hearing the 95% efficacy rate, which is great news. In fact, what they don't give a specific number. What they give is a range. And they say that on average, they're thinking about 95%. In fact, it could be over 97% effective. More significantly than that, there's things like they are getting fewer adverse events in older people. Very unexpected. Normally, older people are more vulnerable, so you would see more harm in those kind of people. And not only that, we're now seeing some evidence about what might happen after just one shot.
Michelle, as the Federal Drug Administration, is it politicized right now or is it apolitical?
Well, the Food and Drug Administration has been very, very definitive that they are not going to allow any politics to come into play in this particular process. Not only that, they are saying they're sticking with the way they do it, to the political dismay of some folks. For example, requiring this advisory committee hearing, right? What we're talking about now is the FDA staff report. But in 2 days, we're going to have an outside panel of experts weighing in on this entire report. Some people are saying, why do we need outsiders? Let's just get it done. It looks great. There's no terrible side effects that we're seeing. The efficacy is very high. Why do we need to have other people weighing in? Why are you taking all this time? Look at the UK. They've done it. Let's go. And the FDA is saying not only that, we're not going to cut any corners here. We're going to do it all correctly. We're not going to approve this. We're going to issue an emergency use authorization, which means we're going to allow people to use it if we find it safe, but you don't actually have full approval, and we can pull that at any point if something bad happens. So they are sticking to every little bureaucratic detail here. They're just doing it at unbelievable hyperspeed.
Okay, Michelle, so let's fast forward and get a sense of what this means for Thursday's meeting and beyond. What are you looking for to determine their reticence to push forward with an accelerated plan of rollout beyond just emergency use?
Well, in terms of we're going to start rolling it out when an emergency use comes, right? The panel is expected to recommend for approval or for authorization on Thursday. We're expecting, we're not thinking we're going to get through the weekend without a decision from the FDA. So on Monday, I think most people are thinking we're going to start seeing some distribution. What they're looking for in this document, right? 92 pages, just 92 pages is the executive summary. There's tens of thousands of pages of the trial. What they're looking for is any indication. Did anybody have an unexpected side effect? Did anybody, develop some kind of a multiple sclerosis, some kind of a cancer, some kind of a heart attack? Did anything happen that could have potentially be harmful caused by the vaccine? And they're going to dig into every single possible risk that they found in this trial of over 40,000 people to see if there's any indication here.
What have we actually made progress on in the last week, Kevin?
It's massively important to underscore how this now fiscal stimulus could be accomplished within the next 7 to 10 days. And even Leader McConnell, for him to say, don't worry, I'm paraphrasing, but don't worry about a government shutdown because we're going to pass a 1-week extension, is a massive signal that this is heading in the right direction. And then finally, yesterday, Larry Kudlow, Jonathan, who you know well, he spoke at a virtual event here in Washington, D.C., hosted by the Washington Post, and said that the president would likely sign, his words, likely was the adjective he used, likely sign the $908 billion plan. And I'm going to do a grammar check. I don't think likely, Tom, is an adjective.
Why are you talking to me?
Kevin,
I got an F.
Let me just finish this.
Genius.
When I spoke to Larry Kudlow on Friday, he was still using the same language that we've heard repeatedly about badly managed states. So are we saying that if there is $160 billion in this bill, that the president still signs it, that 160 assigned for state and local aid? The administration's not against that.
Precisely. And it's been a really, the biggest political difference between now and 2 weeks ago is that President Trump is allowing Leader McConnell to take the lead on these negotiations. And Leader McConnell is driving this for the Republican Party at this particular juncture.
Do you think that Leader McConnell is driving this at this particular point with the idea that another fiscal support package or stimulus will be passed next year, or with the idea saying this can circumvent any additional funding that comes in 2021?
Both, and it's really all going to come down to whether or not likely Treasury Secretary Janet Yellen and President-elect Joe Biden, once they are in office, are able to pitch another round of fiscal stimulus funding to centrist Republicans, because if they are able to bring about the 5 or so centrist Republicans who will be needed in order to get another round of fiscal stimulus through, not just from an employment perspective, but from a national security perspective pertaining to digital infrastructure and a national security way, then they will likely have another opportunity to do so in the first 100 days.
What are the 2 to 3 things that small businesses need today to survive until foot traffic increases with a vaccine?
Yeah, thank you. It's a great question. So, some small businesses are doing really well, but a lot of them, depending on industry, are not. And so what they're telling us is, 1 in 5 isn't going to make it 6 months without some help. So the things they need to see are a second bite at the apple at the PPP program. They need Congress to have an easy loan forgiveness program. And they really are telling us that they want to see a deductibility of those business expenses associated with the PPP loan process so they don't get whacked by the tax bill after taking a loan out. So that'll really help a lot of them through this winter to help their employees stay on the payroll, which is something that we all want to see happen.
What about liability? Because I listened to Mitch McConnell, and he talks a lot about liability, safe harbor cover. He worries that if we don't see some sort of protection for small businesses, that they could be sued out of existence. How high towards the top of the list is that concern?
Yeah, it's also very important. I'd say it's in our top 4. Besides those other 3, small business owners do not want to see them facing a lawsuit, being put out of business because an employee or a customer gets sick. They're taking care of their customers. They're taking care of their employees. They're keeping their stores and their shops safe. But there's only so much they can do to be accountable to other people's behavior. So that liability shield would be very important for a lot of small businesses, but it won't do them any good if they can't stay open. And what they're telling us right now is they need that second PPP loan, at least access and the chance to get it more than anything else right now.
It's interesting because liability in some ways on the Republican side, that's what's holding it up on their side, but then it's not necessarily number 1 on the small business list. Give me some perspective. Let's just do the pretend game. Like, we get a stimulus deal tomorrow. We get $300 billion in small business loans. How quickly does it get to one of your members?
That's a great question. We saw a very, very poor rollout back in April. The big banks mostly sent those loans to longtime customers, much larger businesses than a typical small business. Our average member is 5 to 10 employees. That's very common for small businesses. We are talking true small businesses, the one you find in communities all across America, they struggle to get the banks to pay attention to them, especially at the big and the regional level. So we're hoping that doesn't happen again. We're hoping that the credit unions, the local banks especially, all get access to this program, because that's where small business owners bank, at their local banks, their local community banks.
Brad, small businesses are huge employers in aggregate. And
yes,
the U.S., like much of the world, currently has an employment issue. Starting a business probably has never been easier before. Do we need to start thinking more about how people start businesses and how they keep those businesses going? Because as we go into next year, this potentially could be one of the areas that absorbs that huge unemployment issue, underemployment issue that we have in the United States.
Absolutely, and we're seeing those hiring numbers every month in our survey, right? It's a lot of our members are telling us they're finding it very difficult or impossible to find the employees they need to fill the open job positions and to grow. But when you look at the small business economy in America, it's the third largest economy taken by itself in the whole world. We create half the GDP for the country and almost half the new private sector jobs. So it is something that's very important. It's in all of our communities. When you look at the businesses out there that are supporting local communities, sponsoring the Little League, the high school marching band, doing the charity drives, it's all local small businesses, and that's who is bearing the kind of the brunt of this these economic shutdowns and the COVID pandemic right now at the business level. So they definitely need help. We want to see more open, but we want to see them stay open first and foremost.
The idea is that anything from D.C. is like a bridge loan, basically, or a bridge grant, depending on how it's structured. And then once everyone has a vaccine, things go back to normal. What does normal mean for a small business? I mean, I can't imagine that everyone gets a vaccine in their arm and all of a sudden there's enough foot traffic for sustaining free cash flow that makes up for the last 12 months.
Yeah, a lot of businesses operate on a very narrow margin, right? Their profit margin is very small, so it's going to be very hard for them. These bridge loans will help a ton. Getting the vaccine will be huge, easing people's fears. But if you're in the restaurant industry, the entertainment industry, whether it's movies, coffee house, bar, restaurant, you are really hurting right now. And you are trying to figure out, how can I get enough of my customers back and serve them and take care of them so that I can stay in business, so I can keep my employees on the payroll. One of the frustrating things for small businesses right now is they're seeing some more economic shutdowns in some of these states, right? And then every day it seems like they open the newspaper, turn on the news, and they hear about another elected official that's breaking the very rules that we're being told to follow ourselves, especially small business owners. So they want to do right. They're doing everything they can, but they need a little help.
Okay, let's just talk about, can you give me a sense of what is going on? Just give me a feeling of what these small businesses are dealing with right now. As you say, state by state, we're seeing lockdown after lockdown. How is that rolling around the country? Just give me a kind of a sort of 30,000 feet view of the small business sector in the United States right now.
Yep. Well, right now we've got about 20 million people on unemployment. Unemployment's twice as high as it was to start this year. We're seeing, at our, so let's take a small restaurant, a small entertainment facility that can serve people outdoors, can do that, can take care of their customers. Maybe a barbershop or a salon that's figured out how to safely take care of their customers, cut their hair, get them in and out safely, make everybody protected. In some states now, they're finding they can't stay open. At some point, small business owners are not going to be able to keep this going. So that's what's going through a lot of their minds right now. And you have some industries like construction and trucking that are doing really well. They're growing. The demand is high for what they're doing. But if you're in a public-facing business where you have kind of that social interaction with your customer all the time, face-to-face, that's where they're really hurting right now. And that's true all across the country.
Kevin, this is an extraordinary announcement by the president-elect. We have a general who's 4 years out of service. I believe the rule is 7 years is required. Will Jack, Senator right now of Rhode Island, will he waive that? Will this guy be confirmed easily?
This is going to be a significant confirmation battle to get General Lloyd Austin confirmed as Defense Secretary. Here's why. Should he be confirmed, first and foremost, this would be a historic pick. He would become the first black defense secretary in U.S. history. But the nuance here that you alluded to is significant, especially in geopolitical circles. First and foremost, you have to be out of the military service for 7 years in order to be, or you need a congressional waiver in order to be confirmed. He's only been out 4 years. Now, the Congress did pass, a Republican-controlled Congress did grant waivers for President Trump's picks, so there's that issue. But secondly, it's this broader conversation about whether or not the Department of Defense should be led by a military person or someone of an outsider perspective. And that's part of a broader ideological debate. But without question, this is a groundbreaking, barrier-shattering pick that will face significant hurdles.
And as Kevin knows, I have brain freezes on Tuesday. Of course, Jack Reed, the senator from Rhode Island. Senator Reed is really front and center on this for me. I mean, with his military career, West Point training as well. How would you presume Jack Reed straddles this immense debate?
Well, Senator Reed is a driving force on the Senate, especially as it relates to these types of issues. He is seen as a more stoic and serious voice on these issues. And so should he be able to get behind this nomination, which I do anticipate that he will, it really is more of whether or not Republicans will get behind this, especially if they have control of the Senate. I bring that up because from the Republican perspective, this is maybe one of the picks that they would have issues with. And typically when there's an incoming administration, there's only 1 or 2 nominations that the opposition party would look to block. It's unknown, though, whether or not this will be the pick that Leader McConnell looks to present a hurdle for.
More numbers that don't make for good reading.
No, they don't, John. The numbers growing more devastating all across the country. Several U.S. states posting record infections and hospitalizations rising by more than 2,000 a day. The big news, of course, coming from California yesterday, reporting more than 30,000 new coronavirus cases. That was a record, and as a result, the large portion of the state is back under stay-at-home order. About 70% of the population affected by that. Bars, hair salons, other businesses will have to close, and that will be in effect for at least 3 weeks. When you look at the U.S. as a whole, we are near our peak in terms of the infection rate. When you look at the 14-day rolling average of cases per 1,000 people, the U.K. is near its peak as well, while other countries in continental Europe are starting to see improvements due to more restrictive measures. The light at the end of the tunnel, of course, for all countries, John, is coming potentially in the form of a vaccine. The U.S. could approve Pfizer's shot as early as this Thursday. That, of course, has already gotten approval in the U.K., where it should be rolled out starting tomorrow. And, of course, Moderna's similar vaccine is seeking FDA approval as well. The question, John, is are enough people actually going to take it? You need about 80% of the population covered to achieve herd immunity. And right now, according to an Ipsos survey, only 4 countries are showing enough support to meet that threshold: India, China, South Korea, and Brazil. At the tail end of that chart on the right side is the U.S. and France, which have the least support for getting a shot. Only 54% of French adults say they'd be willing to take it. There's concerns about efficacy, about potential side effects, as we do have to keep in mind, John, that these vaccines were rushed through at a record pace. John.
Deals with China might now be reversed. And not only could this create more tensions with China, but also between the federal government and states.
Yes, that's right. It's not likely to go down too well with Victoria in particular. This is going to be the first deal that gets examined, probably, a Belt and Road deal signed between China and the state of Victoria back in 2018. Now, that deal aimed to increase Chinese participation in about $100 billion worth of Australian new infrastructure projects that would give Victorian companies the inside running on other Belt and Road projects in China and elsewhere around the world. Yeah, and the federal government and the Victorian government have been at odds with this for quite some time now, pretty much since it was signed. Other states as well have memorandums of understanding on the Belt and Road with China, including Western Australia, South Australia, and Tasmania. So all of these would now face scrutiny. One thing that can't be scrapped, though, is the 99-year lease on the Northern Territory port of Darwin. That was signed between a Chinese company and the Northern Territory, so that one would be exempt from the new law. But China said before before this got passed that Australia should refrain from creating obstacles that prevent normal communication between China and Australia. So this is certainly not going to help these very strained relations between the two countries.
And despite all of that, China keeps buying Australian iron ore, which is on a tear right now. So any sign that could change?
Well, no, quite frankly, China needs it, and Australia accounts for more than half the world's iron ore shipments. So expediency means that that is pretty much off the table. Goldman Sachs estimates that if China did take this so-called nuclear option and targeted Australian iron ore, it would only then be able to secure about half the supply that it normally imports, because the supply has been constrained by an accident at the Vale SA mine in Brazil. China's purchase of mines in Guinea might not reach the output potential that they're hoping for. So against that backdrop, as you say, iron ore prices have soared $140 a tonne now, and that's been a huge windfall for Australia. So even as China targets beef and wine and barley and other commodities, that accounts for only about a third of 1% of GDP. Iron ore is the big one.
Deals with China might now be reversed. And not only could this create more tensions with China, but also between the federal government and states.
Yes, that's right. It's not likely to go down too well with Victoria in particular. This is going to be the first deal that gets examined, probably, a Belt and Road deal signed between China and the state of Victoria back in 2018. Now, that deal aimed to increase Chinese participation in about $100 billion worth of Australian new infrastructure projects that would give Victorian companies the inside running on other Belt and Road projects.
Okay, that's it for today. We did not close any trade yet, but we will close whenever they are in profit. I hope you enjoy the stream, and we will see you next week when we'll do another live session. Have a nice day. Bye-bye.
Two countries.
And despite all of that, China keeps buying Australian iron ore, which is on a tear right now. So any sign that could change?
Well, no, quite frankly, China needs it, and Australia accounts for more than half the world's iron ore shipments. So expediency means that that is pretty much off the table. Goldman Sachs estimates that if China did take this so-called nuclear option and targeted Australian iron ore, it would only then be able to secure about half the supply that it normally imports, because the supply has been constrained by an accident at the Vale SA mine in Brazil. China's purchase of mines in Guinea might not reach the output potential that they're hoping for. So against that backdrop, as you say, iron ore prices have soared $140 a tonne now, and that's been a huge